Focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your Watchlist coming in at June 24, 2021, and the Fed scares the stock market again. Today was a wild day, but the range was very, very small, but you actually got a ton of news, and really any of the drops, even what we see here towards the close, it was all because of those Fed members speaking. So we are going to hear a lot more from them this week. There was also a lot of economic data we're going to go over, but overall, we are back to that neutral state that we've been talking about. You could see we have not gotten above where we were at the Fed, and then now coming into the stress test tomorrow, that is going to be key. So we got a lot to talk about. I want to go over what happened in the market today, what we're looking at tomorrow, the plays that we made today, and we actually made quite a few, and there's quite a few more coming, and it is almost earnings season, and then the plays that we have for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if Cyberpunk and 5G means anything to you, then yes, we're the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to chat, baby. So right off the bat, there was very little movement today, but there was a lot of news. You had the Fed speakers. It was Bostic and Kaplin. I have the quotes there. We're going to talk about those headlines, but it was a lot different than what you got from Powell yesterday. He was a lot more dovish. We talked about it, but what you heard from these two Fed speakers today, it was pretty hawkish and it shocked the market. However, if you do look at everything going on, it was a very, very small range. Actually, one of the smallest. You could even see, looks like you got the gas pedal here. Even just taking into account all of this volatility, this was the calmest day. So kind of ironic because there was a lot of stuff. So you had the Fed speakers. Even Yellen came on. She was talking and she did say a lot of things, but what she did bring up was the debt ceiling, and she even said it would be catastrophic if there was any of those measures or the extreme measures that the government has, something along those lines. But she was referring about the government debt ceiling and then the Congress going into recess in August. So that was interesting that she brought that up. And then in the morning, it didn't click instantly, but this was very, very big. You also got to hear about a big case with Fannie and Freddie Mac. Those are those mortgage companies. You probably heard about it from the '08 crisis, but this has been very, very big over the last 10 years. And what everybody is pretty much arguing about is who gets the money, the investors, or does the money go back to the government? So I'm giving you the quick version of this all, but this was very important because the Supreme Court decided that the United States should get the money, and they even gave the government the ability to remove any leaders. And then right after that ruling came out, Biden announced that he's going to get rid of the head of Fannie Mae, I believe. So that had a huge effect on those stocks, but this is going to be a little bit more important moving forward. You'll probably see it, even think about bonds and some of that stuff. And then you had the manufacturing data and real estate data. As far as any bright spots are concerned, the only real good beat today was manufacturing numbers, but then the service PMIs missed, and then the new home sales, this was the thing that really bugged out there. It was very, very low, and you even come and look at the chart, the red line here, that is showing you the actual number. Green was the expectation, but you came in lower. This was the survey, this was the estimate. The actual number came in lower than the lowest estimate. So this will be key to watch as far as the other data that's coming out this week. You're going to be getting a lot more stuff, but then when you look at the Fed, everything and how things are going and what people are talking about, that might make the market move a little bit jumpier if the economic data is bad. or if we really see things fall off the cliff, because again, the Fed is saying it's recovering. But now, as far as the Fed and what was really said, these were the two statements. It was Kaplin and Bostic today. They are the ones to blame for the carnage, but it wasn't even that big. You saw a tight range on the market, but the thing that was said by Kaplin, this was the first move that we kind of saw the market tweak out at. Kaplin said that the threshold for tapering is sooner than most people think, and then a few hours later, Fed Bostic came on, and then he said that the Fed could slow asset purchases in the next few months. So this is that hawkishness that we talked about. You didn't see it over the last couple days or since the week started. Again, most of the Fed members were pretty dovish. They seem like, no, it's not that bad. You're even getting more statements after hours, I believe. Fed Rosengren is downplaying the risks of persistent high inflation. That's kind of been the story you've seen, but now today you got two hawkish Fed members. So now tying this into the rest of the week, like I said, you're going to be getting important economic data, but now you have the bank stress test. We've talked about that. That's going to come after hours, and I think that could have a pretty big effect on banks, and I think the market is waiting for it. But now I also think we are really going to be looking at the other Fed members. If you really think about it, this is kind of the main key moving forward this week. The most obvious hawkish or bearish thing that came out of the Fed statement, it was the actual dot plot. So now think about it. You're going to hear a lot more from the Fed this week, but every time these members are coming on, that is the dot plot getting vocalized through the people who voted on it. So it might just do a lot of movement to keep us in the same place, but these are going to have an effect, and that's really what we're going to be watching for the rest of the week, or to see if the economic data paints any sort of picture. So it's going to be an interesting next few days, especially with the test and everything else, but I wouldn't be surprised to see a lot of movement. And now we need to see what is the momentum and how are we going to move forward from here. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different plays that I'm going to be looking at tomorrow, but all of them are the ones that we played today. So we actually made quite a few. I bought some naked options. I did a credit spread and then more naked options, and we got to monitor some of the other plays. I did not do anything with that Home Depot we talked about yesterday, but as far as the first play, the first one I really like because it had a rumor. We caught it early if you guys were watching, but Viacom, you got a lot of people talking about this. Even the CEO said it was just speculation, but he was talking during their investor conference and he mentioned either acquiring someone like Roku or even merging with a company like Viacom. So I made a play on this. We'll go over it. You could even see the timing. The premiums are high, the spreads are high, and Viacom is really good. I like it just because it's one of the only real value stocks and meme plays that's still around. So it had a lot of hype. People really like playing this at the beginning of the year. You look at it, the stock pays a dividend. They actually own stuff that you know about. It's actually a decent company, but it is tainted. This is the company that Billy Huang, the Archegos situation that you saw, this was one of the companies that he was leveraged on and then he was forced to liquidate. So if you ever come and look at the chart, you'll notice it had this epic run up and then a really crazy fall, and it really hasn't moved at all. That's a song. But this is the key with it, because if it does kind of get awake in here, and I think that will be hard because of this pressure, we will see. But if you start seeing a company and mentioning it, I'm like, well, they have a lot of value. I could see a buyout. That's just the 1 year chart. But if anybody's going to merge or anything, there seems to be good value there. And a lot of people have hyped this stock before. So it's kind of meeting a lot of the metrics that you're seeing move things in the market. So I really like that play. I'm going to be watching that one tomorrow. I ended up going with the August 20th $60 calls, spent 20 cents each. I bought 10 of them. So it was about a $200 investment. If you come to the option chart, you'll be able to see what I'm saying with some of the premium. It shot up already. I think I already have like 50%. And some people even mention the July 9th, but some of these are expensive. Again, I paid about 20 cents and I am pretty far out of the money, but I think the same ones at one point, these came down a little bit, but these were going for like 19, 20 cents, I'm pretty sure. So it was a little bit higher up there, but be careful there. I got August. I like the time on it. So it did end up coming down, but it did shoot up pretty fast as the news got watered down from the CEO. It came down, and even with the market selling off, but I'm going to be watching this one. We got it at a decent price. I didn't go with the debit spread because it was moving a lot. Viacom's a big mover. We were reacting to the news, and if you think about it, I was still far out the money, obviously, but I got to spend a cheap price. If you've seen some of the debit spreads on the more expensive companies, we're still pretty far out of there. So that's why I decided to just buy that play by itself and then not go with the debit spread or a credit spread. But that was the first play. The second play that I'm going to be looking at is going to be JD, and I essentially just went for that China bounce play that we talked about. I grabbed it in the morning, like within 20 minutes. The fact it was holding up, I thought it'd be good, and then the Fed and everything kind of clapped it, but I bought 5 of these for 65 cents, so I spent about like $300, a decent amount, but I made sure I got some time, and you got to kind of be careful of the August. I was thinking about this today. I like some of them, but at the same time, this is only about 2 months. So it has time, but not really. But I decided to go with that play. We talked about some of these stocks and how they've been playing out. If you even look at JD, I said BABA might have been a better one, but even BABA was up in the morning, I believe. I don't know if it ended up closing red. Actually, yeah, it still closed up 2%. So they did a lot better, but didn't move as much. JD kind of shot up, but then it like actually sold off. So I like this play because it had a decent amount of time and somewhat decently close to the money, but I still believe about like 2 standard deviations, but JD is cheaper and it can move a lot. But that was the second play. As far as the final play that I made, this is the one that I talked about. I did a credit spread on JP Morgan. I did 5 of them, so we did a little bit more, and you'll notice the difference between some of the other credit spreads. I got a little bit more time. This one has about 1 month of time as opposed to a 1 or 2 week play that we've been doing. As far as the reasoning to why I bought it, we've talked about this yesterday. I got those Wells Fargo debit spreads. I bought the naked Wells Fargo puts, but now I kind of wanted to hedge it, and this is all related to the stress test. So I figured I'd take a max gain with still a little bit of time just in case, and decently far out the money at a key support level, and JP Morgan's one of the better banks. So this was my hedge to some of those Wells Fargo plays, because again, we spent like $100 for the debit spread, another $90 or so on the other naked options, so didn't do as much. And then credit wise, I believe I got like $200. Actually, a little bit more, 290. But as far as the play, this is what we did. So hopefully you've been watching along. If you don't understand, we have tutorials on credit spreads. You can search the Trading Fraternity credit spreads, or if you go watch the latest watch list with some of those thumbnails, I am giving the plays or the types of plays, the risk reward, and you can learn a lot. I'm giving the full breakdown. So I'm assuming some of you guys are hanging with me, but the idea here is that we are shorting the puts because we are bullish. So if I'm hedging my put plays that I already have that would make money if the stock went down, what I'm also doing is playing another bank, and we are shorting the puts, hoping that the stock goes up or stays above this expiration or this strike price by expiration, and if it does, they will be worthless and we get to keep the whole premium. So I shorted the 141 puts, and then we bought the 135s. I collected a total of 58 cents. Coming to the trade, so you can see the breakdown here, our break even is 140.42. So as long as JP Morgan stays above 140.42, I will get to keep $290. So JP Morgan is trading at 151 right now. This play has a little bit more of a probability because it's less time and it's already far out the money. Compare that to the HD one that we did, and even that City one, they were both near the money. So in this case, I'm selling a trade that is already losing, that is already out of the money. We are just getting that time premium. But now if you do the whole credit to collateral ratio, you'll notice something different about this play. Our max profit is $290, but the max risk is $2,700. So why is there such a big difference? Because the contracts further out the money, the ones that are already losing and down bad, they don't have a lot of premium, so you're collecting less credit, and the range between these contracts is big. So a 141 to 135, that is $6 per contract, so that's $600, and then I sold 5 of them, so your max gain is large if and only if it does go to 135. You take that max loss if it goes to 135. If it drops to 140, you will still lose money, but not as much, and then you break even at 140.42. So this is just the estimate, but using our ratio, it is about a 90% probability because you collected substantially less credit versus the collateral that you receive. So I like this to bring the whole bank play full circle, and we now have a catalyst and get to play those. So as far as everything else, we got a couple of other plays that we're going to be looking at. Again, today was very wild. I want to keep my eyes on Overstock. Oh, Snapchat after hours too. But they ended up doing very well. Like I said, this was the sleeper, but this day was a lot bigger. You could even look at it on the charts. So I like that it's getting that steam. I wish some of the even shorter dated contracts were cheaper. We may look for a double dip, maybe if it stalls closer to expiration, but still holding this one. Really like it. Gonna watch them. Watch UWMC and Arquite. They may come back to life. However, your debit spread did not. But the bright side is we still have time, but you can see it here. It did not move a lot. You're still down about, I think, $1,000 on this, so there's still some equity left, but these are still very far out of the money. The stock did not budge because it did 5%, but it really didn't do it with crazy velocity till the end, and you saw how the market was, but still like the play. Again, you got real estate data and all that, and I can't wait to see the rest of the data, but you also saw Archite. They led the way, and Rocket Mortgage just really cleared it, so this above 20 gets a little bit interesting. I would keep my eye on them. I'm going to be watching both of those. And we're going to be watching the bonds. We'll talk about that. Watch Pfizer and Myrna. There was crazy news today about the vaccine and some of the effects on teenagers and then the heart inflammation, but pretty negative news. But then at the same time, you also got the news of the Delta variant. And remember, Jerome Powell brought that up. A lot of people have been talking about it. You got a CDC report that the Delta variant is now 20% of the most recent COVID cases in the States compared to like 4% last week or a couple weeks ago. So keep your eye on those vaccine stocks. Even throughout the middle of the day, it was really moving the market there. I thought that was very key. So watch them. Watch Shopify. Still in this play. I want to see how it performed today. Again, with some of the tech, you even got to see Amazon, but I want to see how the momentum is going to play from here. It's either going to repeat something like this, or if it sets up something for the next leg, we really want to watch. There may be a double dip opportunity, but for now, the contracts are still up like 1,000% or so. They're still up a decent amount of profit. It actually went down today, so we're still up on the ghetto spread, but the overall option we initially bought, we bought it for $200, but it's still trading at $1,500. So you could see some of that premium embedded in there. Now, we may even do a reverse strategy. I may even want to sell premium here. Who knows? We'll take a look there. But watch them. I think that'll be an interesting setup for any plays. Then I want to watch MSTR. They kind of sold off middle of the day here. It was a little bit weird. Came out of nowhere. I don't think Bitcoin did drop as much, but then you compare it to like Tesla, they killed it. So Tesla was really, really strong today, but going to be watching them. Again, the premiums on this moved a lot. It kind of reminds me of Shopify. There should be some decent plays on there, so watch them. Watch JD, like we said. The bank stocks, Wells Fargo, we have our play. Again, they're going to move a little bit weird because you are going to get the report or the stress test that is coming after hours, but watch them. Watch Valander. This thing came up today. It held up. I like how it held. I think it went up a little bit more after hours, so you even saw its counterpart Laser do good, but the big deal of today, the big thing you saw, even though we didn't get that much movement, and again, we've been comparing the whole NASDAQ leading, you could see the Dow Jones and how this is still now below, and it hasn't caught up to where the Fed was, but the Russell is kind of like the Dow. It's right there in the middle, but the Russell was the real big leader today, and it was absolutely killer. So still closed about 1/3%, and that's what you saw with some of these names and even a lot of the meme names and everything else. So watch them. Tesla, like we said, Ford, they did very good. I don't know if all the automakers did, but if they get back into the streak here, even tying it in with some of the commodity stuff, I think this could be a good play. So still holding the shares, have not taken a look at the options yet. So watch them. Watch Gap and any retail. I'm pulling up Gap because we own it, but Nordstrom's and Macy's, they absolutely killed it as well too. But watch all the retail stocks. I think that's going to be interesting. And then AMD, a lot of you called it at this price point. I think this is a key level, but if it can get around like that $80 level, it kind of brings it up to that Shopify zone. So NVIDIA did good in all of that, but I think AMD is at an interesting spot here, so want to keep my eye on them. I know a lot of people like that, so that's going to be a key to watch. And then finally, baby, moving on to the dollar and TLT. A lot of weird moves. The dollar was actually down today, and then if we want to pull up TLT, it actually closed red a little bit, but again, just a lot of the flip-flop stuff you've been seeing, but not much movement. The range has been key, but we've been talking a lot of stuff, so let me show you with another chart here. But I keep telling you that the bonds and the dollar are playing tag, and they kind of need to with the market, and you're seeing all of these movements. This chart puts it more into perspective. This is essentially now the correlation between U.S. stocks and bonds. So this is what's been going on recently, and you can see exactly where we're at right now. But usually there's more of a negative correlation. This is literally that tag, so you're seeing it kind of get into that zone now where stocks and bonds will move opposite of each other, but with the dollar doing so much just big moves, it's hard to get back up there. So that is essentially what we are looking at. So I do not think we're going to get disappointed by this week and what it could do for bonds and everything and the dollar, because you're getting all of that economic data in the Fed. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to embrace the heartbreak, baby. But the Cole loves you. I love you. I'm going to see you in the morning. Let's go.